Hey everybody, this is DayTraderRockStar, and this is the high probability watch list for the week of, and just make sure it's right, September 19th. September 19th. It's Friday, of course. Boy, what a week. And I have a lot to talk about, so we're going to jump right into it. We're looking at, like I said, today's Friday, and this is the daily S&P, and the big breakdown here came on some Fed talk. And I want to consider this a news event, that broke us down like this big down day. We go look at the different time frames. Well, that's what we like to do. We'll start off with the daily, and right now the daily is very negative. The way I see this setup here, when we have a flat line stochastic that's very close to being oversold but not quite there, we usually call this like consolidation, and it takes another step down, and the chart will take another step down also. And again, this is something I've seen over years and years of trading when we watch the stochastics and momentum, and if it does stall out but doesn't reverse or anything like that. But this has been very choppy, and it's all based on the rate decision coming up. So we have an issue. We could take this as a news event, and if I take it as a news event, usually when I discuss HPS or high probability setups, I always put out the understanding that news trumps technical analysis. If you have a nice pattern, everything seems to be worked up. If there's news out there, things will break down. All right, and you just cannot, you can never guarantee there's not going to be something out there. And this candle, these candles, usually you could look back here and you could see a nice pullback is based on some type of news or get started. Recently, it has been. If you look back, last couple of years, every time we've had a significant pullback, it could pretty much be just associated to a news event, not as much as profit taking or, just the levels like that. The market continued to come back. So we have this news event that's overhanging us. We're starting to react on the charts. The daily is negative right now. The 60-minute time frame has actually been acting pretty well, and I continue to tell people to pay attention to that. We actually had a double bottom divergence here and a perfect rotation. And the rotation again brought us back down, and now we're just entering that oversold level going into early next week. But into this whole pattern, the 60 has always been our go-to pattern to trade off of. So as you can see, this is where we are about now. We're just getting oversold. So I would say that 60 is more of a bullish setup right now on the 60 going into next week. But again, overhanging us on Wednesday is the FOMC rate decision. The policy meeting, and it's also the Bank of Japan's policy meeting. Their bank meeting, federal equivalent, and they're going to probably end up maybe announcing some kind of stimulus program or additional stimulus. So that's also going to have an effect on the market. So going into Wednesday, I'm going to tell you right now, I feel that the market will move up into Wednesday's news. I think it will move up. I think there's so much transparency out there. We know that the market fluctuates on every time a Fed speaker gets out there, and then or there's some kind of data point out there, and they're able to adjust the odds. Now there's a 30% chance of a Fed out before the end of the year, but there's only a 10% for up this September. I don't even know what the September thing is. It changes every day. It's like a casino. It's odds and what the line is. It's truly a casino, and that's you got to be careful, because half of the time no one knows what's going on, and you have to sometimes just take personal experience, psychology of the markets. That's the way I like it to look at these events. Sometimes, everyone's so worried about it. It gets talked about so much, but it gets put in front of everyone so much that we're eyeballing that. The market usually smart enough to kind of price that in, and you got to feel that out. Not all the time, and then you start getting comfortable with one technique, and you have to start thinking that the market's going to get smart on you again. So a good example today, actually, or was it yesterday? A good example was the what was the now I'm talking
High tick alert.
And there's a high tick alert. Let's take a look at the markets right now, and this is going into 3 o'clock. We just had a high tick alert. I can tell you right away, I have a good list for us going into next week, but the market's going to be preoccupied with the Fed meeting. So I'm not expecting a lot early in the week. And I would rather say, let's get by this news event, let the market get back into a rhythm, and then we start to see some of these things. Because you're going to notice, and I'm going to show you right now, that there were some really good setups, but the market pulled back and they hit their stops. And you can't predict that, and I'm not making an excuse, but that's just I'm just going to show you a fast example, because I was going over my HPS setups, and I noticed a lot of them hit their stops this week with the pullback. And a lot of the HPSs have to be at a certain level to qualify for an HPS. So they usually are on a trend line and stuff. So remember this 20th Century Fox. What's happened over the last few weeks is the market went sideways, and whenever we put down a buy zone, we kind of anticipate it making to a move. That way we're buying into we might be buying into weakness here in this situation, or whatever the situation is, whatever the chart. But I plot out the buy zone, plot out the profit zone. Everything's connected to the back end, so it automatically registers. It sends you out an alert, real-time alert. It goes into the trade alert box. It sends it to your email and text, whatever you have signed up, and it works like that. So it's a great automated system on great setups. So you might have a great setup here. What happens? The market's not, going sideways. This is not doing anything. And what happens is it eventually comes down to its buy zone. Now I'm going to have to push this arrow, and you're going to see the completion of the setup here. But what happened is we eventually came down here, and it triggered the buy zone. But if you're not, you have to understand where that buy zone has to come in. That buy zone is meant to be on a support level or a recognizable channel. This nice channel line. So. It came back down here, it triggered. I did the watch list. I said, you have to understand that we have the lower trend lines underneath us, and I would adjust all these, and understand that this buy zone in reality would be down here if we knew at that point that the price was here, because you wanted to look at this. So right now, like 20th Century Fox, the market has dipped down, even though it was hanging tough into this consolidation. Actually was hanging okay. I mean, you could be in this position here, and you're like, all right, this is holding up pretty good. And boom, news takes us out of the game, and now it actually takes us to a good buy zone, and it's probably one of the better zones that you can. So you'll see this one on the watch list today. But that's an example of something that can happen very easily with news. And then you have to understand that each if it doesn't work out in a week, continue to look at these. They're all there for you to see. And it's just, like I said, it's just a matter of if something breaks down or not. A couple of these did break down. I want to go over these with you as we go further into the watch list. But again, you're seeing, a typical channel. Everything was working out fine, and then boom, news. So news, this was actually working out fine. I like that channel line. I don't mind it comes down, bounces, pulls back, consolidates sideways, starts moving back up into the channel. But in this case, you had a little news. It broke down. It just hit the stop. It's starting to rotate back up. And what's going to happen, most likely, these patterns will start to come back in. These prices will come back into the pattern, and it will continue to hold those. And this will be an event type of thing. And across a lot of stocks, you'll see this little spike, gap down. When the futures gap down, they're taking a lot of stocks with them. So big event next Wednesday, the FOMC meeting. That happens at 2 o'clock. Before that, I am saying that the market will move up into that meeting. I think that everything's been priced in pretty good. Even though the daily is quite negative here, I'm not saying what the reaction is going to come from the meeting in itself. I don't think there's probably going to be any rate rises. And you know what? And we'll probably have a discussion on that whole, the whole thing about that. Jamie Dimon came out last week also and was talking about, hey, yeah, they need to raise. It's a quarter point. Why is everyone getting so upset? It's a slow, gradual process, and it's a sign of a recovering economy. And now I know a lot of people out there would disagree and stuff, and that's just a battle that you're going to always have two sides of the story. but it was what the market's going to perceive, and that'll be the true test. If the market perceives, eventually we do get that rate rise, the market should actually move up off that. We shouldn't be scared. That's already been talked about. It's already been done. If it does react to the downside, then you have to take the temperature of the market and see why that's happening. But for right now, I think that this area is getting priced in pretty good. Things will start moving back up. You're just going to have some road bumps in Wednesday to see how that's going to react and how that's all going to play out. So I do have those setups for you. I want to bring them to you. But just with that disclaimer, things are going to get choppy in the first couple, well, not the first couple of days. In the first couple of days, it'll be pretty much flat. Not much is going to happen. Things are pricing in probably right now. So I would say Monday, Tuesday, even Wednesday, pretty flat up until the meeting. And, it'll probably be great for using the tradometer and the Rambot. They'll probably be in a pretty decent range. So I would really recommend, paying attention to those indicator signals going into early next week. All right, well, here's another of the HPSs that broke down, and this is Verizon. And this is just, definitely related to the interest rate hike talks and the chance of that happened in September when there was some comments coming out, took everyone by surprise. So all those interest rate type of stocks here really got hit, including Verizon, AT&T, utility stocks. And that was working out fine. So again, you have great setups, but if news comes into play, boom, you get hit. It takes you right out of the game, and then eventually starts moving back up. This was really actually working good. It was working fine, but the news came out about the interest rates, and it got hit. And the last couple of days, the market's been fluctuating, but it's following the market right now. I haven't got the chart up yet. I'm still working on the chart, but I could start off by telling you that Gilead, that up on the top here, is one of my favorites for next week. I've been watching this one closely over the last couple of weeks. I had some options that have expired, and just because it has been going nowhere. But everything else, I remember we talked about the kind of stochastics here, flatlining down here is kind of bearish. This we moved up here, it kind of stalled out here in the face of the market, what the market's been doing and stuff. This is starting to look like it has a decent base building, and even today's, the market right now down about 88 on the down, 910 on the S&P. This is holding the top part of this recent candle. This looks really good going into next week, and I don't even have a good trend line here marked out, but we'll say 80. I would like to get this back above 81, $82. 82 would be a great target on this. Fast, everything we're talking about is within the next week. I think we have a shot on this, but again, Wednesday is going to be a rock and roll day, and this base is looking better and better for a breakout. Consolidation. So I want to get this chart up for you right now. What I want to do here with you is I'm actually going to do a chart with you and show you how I break down some of these charts, because when you look at a chart, I have two charting services I use. I use the TC2000. I use TradingView, which is an excellent charting service, tradingview.com, and they have the premium version, but the tradingview.com definitely worth checking out. So we do a lot of these charts using their platform. And when I take a look at a different platform, sometimes you'll see a different chart, because lots of times I already have all my trend lines on the other ones just from, I look at this chart and I'm looking at it and I'm saying, all right, I'm seeing this bigger wedge pattern, the downward wedge pattern here, bigger pattern playing out there on the daily, and then, I already have some lines in there, so to make you look at it. But then I think about some of the rules I try to stick to, and especially when it comes to gaps and technical analysis. So whenever I have a gap, and I apologize for some of those sounds in the background, I have the the show still going on. I have some alerts showing up. But here we have Gilead here with with nothing on the screen right now. It's kind of showing us anything. But I got to remember that whenever we have a gap, we tend to have a new pattern start to develop. I tend to use the gap as a very important pivot area. So I said, all right, let's take a look at this. How would I approach the Gilead here? So Well, we work off of what we the strategy called, or a technique called 1, 2, 3 channels. And, it's just kind of a scientific mathematical approach to making channels and lines. 2 lines make a straight line, right? 2 points make a straight line. That's the rule. So you need 2 pivot areas. And the pivot area is defined by, a change of trend. And over time, you could define it usually by a meaningful change of trend, or a change of trend of, of a technical kind where it breaks through a tight trend line. You could say, all right, here's a you have to really, understand where your trends are happening, the short-term trends are happening. Here's a tight little trend line. So here's your tight little channel, and here's your breakout of that channel. So this would be your pivot area here, and this same thing, there would be a pivot here. There would actually be a pivot like kind of right here. There's a pivot there, there's a pivot there. But you're looking for the main pivots, and what I want to do is I want to draw a trend line definitely from that area, and you can see there's a definite nice little candle here, spike up here, two pivot areas there, and a straight line. And what I normally do, now that I have that straight line, is I'll just clone that line. I want to make sure I have a perfectly parallel line. You could clone it, or you could copy it. I'll clone it, copy it, and I want to drag it down to one of the pivots. But as you can see, that pivot lines up perfectly. So say we didn't even have this in here. Say we just, the market hasn't come down to this level yet. Watch what I'm going to try to do here. Now I'm going to see if I could do this. So this is what we're dealing with right now. Here we have 2 pivot areas, define 2 pivot areas, and I want to make a trend line here. And I said, all right, actually, let me take this. This is even better. I want to take that line at this point right here. I'm going to clone it. And because only one pivot's down there, I'm going to just drag that line right down to this candle right there. So now I'm waiting for it. Now I know where my next level. So if the stochastics rotate down and we have a channel line, a 1, 2, 3 channel, started with a gap, that's a high probability zone, and we tend to get a bounce off of that. So now we're going to just move. As you can see, we moved down a little bit further. Ooh, we tagged it just about to the penny. Look at how we tagged it. We're oversold. 1, 2, 3. You trade 4, 5, 6 if it appears, and then you start looking for divergences for a breakout of the channel. So here's your break. Here's your move down to that channel line, oversold. The technique would say, hey, consider it along here. And you can see the market here just kind of moved up a little, and this is where we are right now. So it did move in the direction, and this is where we are right now. We're kind of consolidating. We're flatlining here. But the fact is we have a pretty decent downward sloping channel. We had one here, it broke to the upside. Now we have a new one. We're going to move back down here, or because we talked about that kind of stochastic kind of flat line pullback here, that this was going to be more of a bearish flag. We're going to push up to the top part of that trend line, and that's where I'm looking at. So I think we have an easy target at 80. I want to say we're going to go for a target at 81 on this. So right now, so I'll put what I'll do is I'll put because it's a nice 2-day pattern, seems to be, we'll put a buy trigger in here. So we'll put a buy trigger in here. That day here, that high is 79.20. So, and I'll fill this in now. You're seeing the back work, so I won't bore you with this. Hold on, let me pause and I'll come back with it. All right, so you see we got our buy trigger in at 79.25. That's be 5 cents above the previous 2-day highs. That might even happen today. We still have a half an hour left in the day. And the market, you can hear in the background the high tick alert. That's the tradeometer here tagging the market with a high tick alert. By next week, I'll be doing push-ups for every high tick alert on the show. So don't forget to come by and do some push-ups. Every high tick alert, 20 push-ups I do. But you can do whatever you want. I never force anybody to exercise if they don't want to. Just try to get people out of their chairs. All right, so the buy trigger here, 79.25. Stop 76. Honestly, I think this has bottomed out. I think you have a much bigger move to the upside before taking out 76. So I think this is still a great trade. I don't think that stop is. I don't think that stop is too tight, and I think it's plenty of time to get in. I think 81 to 82 is conservative on the first time trade, but these setups, I want to always try to make that setup work within the week time frame. But over time, I think this goes higher. Stop 76, buys, profit zone 81, 82, but you can always adjust that as you want to see. So Gilead here, definitely something I'm liking. I'm liking next week. I've been following the drug stocks a lot. We know that the drug stocks are going to be affected by the election. So we're going to continue to watch those. And I have another video that I'm trying to get together talking about, you know, the effects of different sectors, or the effects of the election on different sectors. So I think actually Gilead is actually going to start moving up into the election. It's been hit so much. It's definitely it's the laggard of all the others. The Biogen is doing better. Amgen's doing better. Eli Lilly's doing better. So, I mean, there's other ones to go. But as a basket of stocks, all of those are looking pretty good. So I'd pay attention to all of those. And plus, we have so many other stocks I'm going to go over with you on this list here. So let me get this sent out. And again, what I do is I'm doing this. And you might be seeing this for the first time. I'm thinking of actually doing something special today. I'm actually, because of that Fed meeting next week and stuff, I was, you know, I want to show you a couple of good stocks, but I want to save most of them for the members. But I want to put out this with some free ones, and you know, out to the public, and let you see how the process works. And you know, because when you look at the dashboard, when we have our dashboard and we get those alerts come right into the dashboard, and they go right out to your, you know, your email address that you have signed up with. So you know, you see the technique and you feel like, wow, you know, that's going to be good. You know, I want to buy on the weakness, or I want to buy on that breakout. You don't even have to be near the computer sometime. And we have such a good selection there. And we only deal with really quality names. So follow these drugs next week. These are going to be, you know, I think they're going to be really moving well. Not sure if we went over Disney earlier in the video. I just want to go back and show you the updated chart on that. Still chopping around sideways, pretty much right into that buy zone. The day before, yesterday, or actually yesterday on Thursday, it came close, but rebounded back down. It's really staying up into that 92 area. So again, you know, still active, still looks pretty good. Basically, it was kind of a divergent setup where the stochastic starting to lift up here. We kind of flushed out of those lows. And if I go back over here for a second and show you Disney on this one. This little candle right here, you know, that candle right there kind of flushed out, took out the lows, pushed back, following through. Follow day here is looking pretty good. So still active. I like it. You know, we're still holding on to the divergence. The 60 is actually holding up. We haven't, you know, we crossed back over, but we didn't retrace too much. So, again, going into next week. Now, I just want to go over the other stocks I have on my list. We're going to go through a list of them. Some of them we've seen already. Some of them you haven't. And I'll make my discussion, you know, some of them are not on the HPS watch list, but they're on the focus list. I mean, we're going to keep an eye on them because they are looking pretty good. BCR here. BCR, BARD, CR BARD, healthcare, medical equipment. You can see there's a divergence there. Trying to get my drawing tools back up here. So you had that little lower low, that higher low right here. So divergence, take it, you know, however you feel like it. Now, Under Armour, we did Under Armour, great setup. That chart's already in there, but you always got to consider Google. You know, Google's been actually showing great strength. It's actually crossing back up here, pushing back up. It's holding way above the 50-period moving average, really hugging the 20-period moving average. And these stocks that are trading near the highs, there's a reason why they're trading up here. So, you know, it's again, the market's going to come down to an event. And, you know, after that event's passed, I'm sure Google starts ramping back up. Until then, right now we do have a divergence, and that is a good sign. You know, that's what you want to see. And you want to see that divergence here, to kind of predict that move back up here from this point on. This is a nice little channel also. So everything here points to a move higher. Excuse me. Z, I'm going to put some new ones. You're going to see some new ones here. Remember Rebecca Diamond when she came to the office? She mentioned this one, Zeltic Aesthetics. and I think they suck fat out of your butt. And this has just been I've had it on the watch list since she talked about it. I brought it up and I saved it, and I always go through to my scans, and you got to be impressed with the action. It's actually new highs, $40, holding that 20-period moving average. I don't know much about the fat sucking business or even this name, but I can tell you it's acting really well. So I'm going to look into it a little bit further. Maybe we could even get Rebecca back on, at least by a Skype call, and see if she still follows that. Proof Point, cybersecurity. Same thing. Another good stock here, just off the highs. Recently broke out, pulled back, but just got a nice oversold level. So this is just like trending up. First pullback. Every pullback has been bought here. Oversold, oversold, nice move up, oversold. Nice multiple daily. This one we barely got oversold, but once we started turning back up, this tends to rally. So it looks like, you're just on the right side of the trade, a nice pullback PFP. And I like the hack also. I like the cybersecurity. The same thing. Nice pullback, holding that 20-period moving average. So I think a lot of this one's not at the recent all-time highs, but it is, does look good for the cybersecurity stocks. As this is a standard trending pullback setup here. A nice rotation, holding the 20. Just curl back up just like it's been doing back here. Other than news. News can affect these charts. So we got to, kind of get through that news item there. Let's see. Adobe here, it's showing back up on my list here as another quality name. And this one here, recent divergence. Revert a little lower low with a reversal candle. Definitely crossed back up there, so that's very strong. And that's a divergence that happened above the 20 line. Now we have the divergence here that worked out fine, and there's another one here. And I expect this one actually to continue to move higher. Look at these charts, DLB, Adobe, just beautiful, beautiful chart. So these are really strong stocks. You can probably trade them. You could probably time them a little bit better on the 60-minute time frame. Look at that 60 pullback here. 60 pullback here. Nice move. Move from 48.50 to 49.90. So, you have a decent move in a short amount of time. Not bad. I mean, right now it's not into that zone again. That multiple indicator type of setup. But something to watch. These strong stocks here. Write them down. Now PSA here. We put this. We put that chart out there for you. It's already out there. PSA on the HPS watch list. And again, it's right on that trend line. HPS is on the top of your dashboards. Now here's one that you know what? Interactive Corp. They own all the dating sites, and I was listening to I was reading an article or something about Tinder, and apparently they own Tinder also, and now they're charging for Tinder. Tinder's like this college dating hookup app, and they're starting to charge for premium services and pro services and stuff like that, which is, you hear about the popularity of some of these apps. So it got me looking at Interactive Corp, which I always liked it. Barry Diller's Interactive Corp. We had a nice consolidation here. I was tracking it. I lost track of it, and then as you can see, we broke out, now consolidated, broke out, kind of consolidated. A nice rotation back here. I kind of like it. It's boring. It's not the type of stock I typically get into, but I wanted to show it to you. Get it out of the way there. Cabela's also. This is a recent divergence. A little wedge pattern breakout. If you look at the two pivot areas here, you want to make a measured move of possible measured move. We're looking up at that $50 range. And Cabela's here, not that far. This one had rumors of Bass Pro Shops being interested in it. And it seemed like a pretty decent rumor, but no position at this time. It does have that divergence, and that's my job to bring those to you. HACK, we talked about that. Waste Management. Been eyeballing this one for a while. I haven't decided on it yet. But you can see this is a daily. We're oversold on a daily. It got down here, and it looked like it was trying to put in a divergence here, and it kind of popped up to 20 and then failed. It's almost a what we call a coil stochastic setup, where we have a series of lower highs on the stochastics, 3 or more, one including the top 1, 2, 3. So we're up to 3, and if we had one more bounce, and that, this tends to give us some good timing on a tightening of a channel like this. It's interesting. Again, I think it's a quality pullback. It's a good pullback on a weekly. The weekly is just outstanding right here. So for a long-term swing play, look at the times of weekly. This pullback was a perfect weekly pullback. This weekly was a perfect weekly pullback rotation, and here we are once again. Very similar setup here. So, yeah, you gotta like this waste management down here, no matter what. So you're set up on the weekly, you're set up on the daily, and you're just about set up on the 60. I think this is worth a trade going into waste management, or going into Monday. It's too late now, but going into next week, waste management. Let me set up the chart for you. All right, so here we have waste management. I put it on the 60-minute time frame instead of the daily, because you can actually see the range a little bit better on that daily. If we take a look back at the daily here, it looks pretty tight. But remember, the reason we're looking at this is because the daily, the 60, and the weekly are all lined up perfectly. This could easily be a nice little trade. We'll watch the 200 underneath us. But, when things line up, especially the daily and the 60 line up, that 60 rotates here. And again, this is a tradable zone, so we have everything lined up. We actually have a kind of a little higher low on the stochastics. No divergence, but we're going to look for a breakout of the 60-minute time frame, bring us up towards that 200-period moving average, and then from that point on, we'll see where everything lies. But I think we're due for a nice bounce. It looks really good. I'm probably end up taking this on the trigger early next week if we trigger this. And again, there's two types of alerts you'll normally see. You'll see a buy trigger or a buy zone. Buy zone is usually the price coming down into a zone or a short zone, depending on if it's a long or a short, and a profit zone, which is usually an area where we're looking for the stock to move to. And then, of course, the stop. And then if there's any notes, I put them in there. But the video is supposed to go along with the chart. So every chart will be talked about and, kind of walk you through it. So that one's set up. And the multiple time frame setup. One last thing I want to say about that setup is, even though I have the buy trigger, it's a move above into strength, kind of taking out some recent highs. We have an underlying trend line. For whatever reason, we have a gap down. Keep an eye on that underlying trend line, and that might even end up being a buy signal also. So there's two ways to approach this trade. Whatever line gets hit first probably should be traded, or at least taking a position of getting into a trade very close to that level, the breakout or the pullback. I showed you Kroger earlier on the HPS, how it it stopped out, but it's also near that lower trend line. So remember, we could actually you could actually reset that one up if you wanted to, and just kind of use that trend line as your bounce zone. Still looks like a divergence with a stop right underneath that. It was on the list, so I want to bring that up again. The card holders: MasterCard, Visa, American Express. MasterCard here, probably best of breed and very strong. I mean, considering the market has been selling off last 4 to 5 days, this one has been going inside. Very strong move here. There's no doubt that this one is going to eventually take out the highs, get through $100, and just continue to push higher. It is it's destiny, right? It is destiny. $100 is such a big level, and I'm sure we're going to look back at this. It's going to be $140. Try to get a trade going on this one next week. Well, it's not an HPS. It's pointing down a little, but you're seeing the divergence as this moves sideways and this is moving down. This is a price stochastic divergence, which is very strong. Everything looking really strong on this. That's MasterCard. Visa, same thing. Holding that 20-period moving average. Nice pullback, nice rotation. That's holding $82, and again, right up at the highs. And then we have American Express AXP, which has pulled back a little, was consolidating. This was kind of the weaker of the two, but we were also oversold here very quickly. So that's also good. So we might even get a pullback here, but we also have the oversold level, which should push this right back up. So we're going to look for this to move right back up through that consolidation and then get on our way there. So MasterCard, Visa, American Express, the three I'm watching right now, all looking ready. All looking ready. APD, air products and chemicals, just off the highs. It's really the first pullback off of that big double bottom, and this is the first rotation back here. So, Maximilian likes these type of rotations. A nice pullback, first pullback, and the first oversold level. This looks like it could easily bounce back up here. APD, nice. Darden Restaurants, still love this one. Again, didn't really get affected too much. We had the gap down. We had, certain stocks here gapping down, but this is actually holding up pretty good. If you take a look at the big picture, you have this underlying trend line that's kind of, supporting us, and we've been chopping around it. We kind of held on to it. A little slight divergence happening as a pullback, and we move sideways. So, still think we're bullish on this move. We're going to come back into this pattern. It just hasn't happened yet. But definitely Darden for the long haul. Panera. Oh, PNRA. I have this one. Interesting, huh? Big pullback. This actually had some positive news back here. It popped up and then reversed. If you look at this also, there's a pretty decent line of support back here. We gapped up to, held that area, pulled back, came up to it, tagged it once. Tagged it twice. Then we broke through of it, came down, held off of it pretty much. Started building a little support, but we come back down. Now we're actually right back to that trend line. So a good area of support plus the oversold level. Gotta look for a bounce here. Gotta look for a pretty decent play off of this line. All right, so that's the list going into next week. Quite a few on the HPS, some other ones to watch, and just remember this volatility really is a news event. So it's going to be something bigger. I don't honestly. I think we try to get back up there a little before the meeting on Wednesday. So Monday, I am actually looking for a little bias to the upside. Even though look at what's been going on: down day, up day, down day, a flat day, up day, down day. And we talked about, just following the 60-minute time frame that's going to give you a good setup. So actually coming into Monday, we will have that 60-minute time frame just about ready to rock. We might actually start off with that, and we could easily see this start to grind back up. So I do have that bias. As I mentioned it again, I do have that bias to the upside, and I'm really focused on a lot of the drugs and biotechs early next week. Best bet going out right now, I'm going to call out for Gilead, but there's so many, so many good rotations happening, so many good setups. Loving the MasterCard, the Visa, the waste management is very interesting. I think there's a lot of good setups down here, and even the cyber security stocks that we've been looking at have been very strong. So I want to get this out. Like I said, I want to put this is going to be a kind of an open watch list. I didn't, kind of a little promotion going into the fall and getting going here this week. Things have been going good with the HPS, with the tradeometer this week, and I've been tweeting most of the setups out on that. But that is a product that we offer to members, and I have to keep that behind the walls, so that every so often you'll see an alert on that. Take advantage of it when you do see it on Twitter. And I think that's about it. We'll see everyone on Monday live on the show. I'm looking forward to it. I'll be rested, relaxed, and we'll be ready for you. All right, I'll see you Sunday night. Futures open up 6 o'clock, Day Trading Radio. I'll see you there.